Hello, fellow traders. This is Gabriel again here with our coaching course about Forex trading. This video today is going to be about bearish engulfing candlestick patterns. But before I start with the topic, I would like to remind you that if you like the contents of my channel, if you find this interesting and useful in your career and your trading processes, please hit like, subscribe, and share the content. It would be very useful. I mean, of course, for me, but for the community that I'm trying to build regarding how to trade with honest expectations, with honesty and reality about what the market is. All right, so without further ado, let's move into the topic. Today, we're going to talk about the bearish engulfing pattern. The first thing here is to understand how it is constructed, its characteristics. And basically, the bearish engulfing is a strong bearish reversal candlestick pattern. It appears after an uptrend and indicates that a potential shift in the market sentiment from the bullish to the bearish is in effect. It consists of two candles and signals that the selling pressure is overpowering the buying momentum. First of all, let's identify the pattern. It's very simple, right? So basically is these two candles, right? So I have a bull candle that is coming from a bullish trend, right? And here, the next candle is a bear candle. That is not the thing that we can consider, okay, we see all the time in the market. The detail in here is that the bear candle swallows the previous candle. That is the key point in here. Once again, I repeat, I cannot solely rely on one candle pattern to set a trade. No, this is just one indication accompanied by all the indicators in my toolkit. All right. So this is the engulfing pattern. You see, the green candle is inside, somehow is inside the red candle. Okay. So let's observe the pattern in our charts. Here we go. Here we can identify the structure, right? So I have this one. I previously looked for this candle pattern in order to save time in the video. And we can observe something here. The trend was going up and shifted, right, from bull to bear, right? So that is a nice indication as well. What else I can observe in here? Look at the candle pattern here. This is the bull ending the correction in this case, okay? And the bear is engulfing the previous candle. Let me expand it a little bit to explain it in detail. Look at this. Somehow, analyzing the structure, I can see that the small candle, the green candle, is losing power, right? It is coming from an uptrend, of course, okay? Gets here, and suddenly appears my engulfing red candle. I trade only, of course, if I have a confirmation pattern, etc., but only when I wait for this candle, the bear, the engulfer, closes. When it closes, then I'm going to set my trade. Okay, so let's recap this pattern here. It's very simple. We can spot it with certain regularity, but the structure is like that. Remember, the first candle is a small bullish candle, okay, and it continues on the uptrend. It shows that the buyers are still in control, but maybe losing its momentum. The second candle, as you can see here, the red one, is our bear candle, and it completely engulfs the body of the first candle, okay? It means that the opening price of the second candle, that is to say, my bear candle, the red one, is higher than the first candle's close. But the closing price is lower than the first candle's open. That is critical in here. This candle signals a strong shift in the momentum from buyers to sellers, right? So those are the key characteristics. Remember something. When we talk about bear candles, they open here and they close here. When we talk about bull candles, they open in the lower part and they close in the upper, on the upper side. Okay, so when the bear closes below the green one, it means that the power of the bears is getting a little bit stronger, right? So that's important to bear in mind. What is another thing that I have to analyze behind the psychology, right, of this pattern? Basically, the buyers are in control, of course, but the small size and regularly happening suggests weakening momentum. And now the second candle, sellers are aggressive now, pushing the prices down. That is something important because those are the candles that are signaling the potential trend reversal. Let's observe something here. We can spot this along with other signals. An important signal here that you can observe is the presence of this EMA, right? This is an exponential moving average. This exponential here, the one that I set is 200, okay? So this one is a strong resistance, right? So the presence of this here gives me more confidence that the trend, the uptrend, is very likely to reverse, okay? And it is confirmed by the engulf. Now, how to trade this pattern? I repeat, alongside other indicators, right? So what would be the best way to trade this one? Okay, the very first thing is to set my entry point once the second candle, that is to say, the bear candle has closed. When this candle is closed, I set my entry. I set now my stop loss, okay? And it has to be above. And here is an interesting thing. I can have a double protection here in my trade. I can do this. I can place it either here right above the top of the bull candle or above the EMA, the exponential moving average, because that is, in this case, is a natural resistance that price will get in there in case it retraces, right? So I set it there. As I mentioned in my previous videos, remember that always, all the time, my take profit has to be at least twice my stop loss, right? So if my stop loss is, in this case, let's see, my stop loss is, let's analyze, is around 8 pips in here, right? So minimum could be 15, 16 pips. So my, could be here, look at this. I could set my stop loss, my take profit here, right? So it'd be a good idea to set it here. So this is my take profit, okay? So once I do this, basically happens that my entry point is below the close of the engulf, right? My stop loss, this is my entry. My stop loss is here above the natural resistance, in this case, the EMA, right? This EMA, 200 EMA. Okay. And my take profit is twice the size of my stop loss. And look at this. In the case that I enter here, it retraced, the price retraced, in fact. In a moment, it was bull, but it didn't even, and look at this. If I had set it, this is interesting. If I had set it, my stop loss very close to the opening and closing of the two candles involved in the pattern, I would have been stopped out. And that is a typical mistake as well, right? So give it a little more room, okay? Let the trade breathe, okay? So look at this. It retraced in a moment of the operation. This candle was bull. In a moment, this candle was this, right? So retraced, but didn't touch my stop loss. So after this one came back in here, turning to be bear, this candle now turns to be a second confirmation pattern, and then went down, okay? This is somehow a nice way to detect our patterns, okay, and to trade them in a very realistic and very responsible way, okay? Remember, I trade any pattern, bullish, bearish, engulfing patterns, whatever, okay? But always using other tools, right? Other indicators, so I can confirm that that is a proper moment to enter the trade. So my dear traders, thank you very much for your time. This is all for this video today. And once again, if you find these contents interesting, if you find these contents relevant for your learning process, please subscribe, share, and like. Thank you very much. See you the next time.